Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And I will be talking about setups today. And those setups I will be talking about are an underlying asset, but they can be taken any number of ways with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube. So again, please feel free to post your questions and comments. All right, my agenda for today, what I'm going to go over is economic data and events, news items that came out this morning, the remainder of the week. Excuse me. Then I'll go through my positional analysis. I'll review a few setups until right before 2 p.m. At 2 p.m., that's when the FOMC announcement, the statement comes out, and we will go to the live market and watch the live market at that time. All right, let's get started. So first of all, news items for today. PPI came out this morning, and it was at 8:30 a.m. Eastern Time. Initially, there did not seem to be much of a reaction to it, but it looks like it was lower than expected for the various measurements of PPI. So that was this morning, and then this afternoon, the FOMC announcement. Again, at 2 p.m., the press conference begins at 2:30 p.m. and that is I'll be ending in that time. Let's just take a look at this to set expectations. This is the CME Fed Watch tool, and what this is showing, the current target rate is 500 to 525 basis points, and what this is showing is right now there is a 96.6% chance of a pause of the FOMC not doing anything at this meeting, and that has shifted just a little bit lower from a couple of hours ago when I checked it. It was around 98, almost 99%. So anyway, a very large percentage chance of no rate hike at this meeting. And then I think for the next meeting, July meeting, there is a slightly greater than 50% chance of a 25 basis point rate hike. All right, but we're concerned about the meeting today. All right, so the remainder of the week, there are some additional data items and events. First of all, retail sales tomorrow. And then Friday is the big June options expiration, and also consumer sentiment comes out at 10 a.m. All right, so that is the news items. let's take a look at positional analysis now. So this is the S&P 500 futures, ES futures in Bookmap. And before I take a closer look at that chart, I'm going to take a look at a larger time frame. This is SPX in a 30-day 1-hour chart. And this is in Thinkorswim. I'm using a script from Spotgamma to show the Spotgamma levels, these red horizontal lines. There's been an issue with this script for the last couple of days, so I know the primary levels that I'm going to show are correct. The other levels may not be correct. So I've sent a couple of emails to support, and so far no response. All right, so let me point out levels. So first of all, here is the lower and upper edge of the expected move for the week, shown with this dashed purple line. And note that SPX is trading above the upper weekly expected move. And D&T Matter had noted earlier in Discord does not have UEDM. That's the upper edge of the daily expected move, and you can get that from any options chain, and that's what I do. So I'm showing that here with the dashed blue lines, and again, you can just get this information from any options chain, and just look at the end of the day when the market is closed, when SPX closes. I just look at the close and then the expected move for the next day, and then I subtract that and add that to the current price, and that's how I get those numbers. So there's nothing special there. Just again, you can get that from any options chain. So right now, again, SPX is trading above the upper weekly expected move and in between the lower and upper daily expected move. Let me point out some Spotgamma levels here. First of all, here's the put wall, and that's at 4,000. That's a strike with a large net negative gamma that can be expected to act as support. And the next level is the volatility trigger at 4240, and that did shift 5 points lower from yesterday. And that level is important. It is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue volatility. All right, the next level is 4,300, and that is the absolute gamma strike for SPX. That's the strike with the largest absolute gamma. And then finally, the call wall is at 4,400, and that is the strike with the largest absolute positive gamma, and that can be expected to act as resistance. All right, so those are the primary Spotgamma levels: put wall, volatility trigger, absolute gamma strike, and the call wall. And just to note, like I mentioned before, the volatility trigger did shift slightly lower, just 5 points, from 42.45 to 42.40. Otherwise, there were no shifts in levels for SPX and SPY. All right, let's take a look at another Thinkorswim chart, just to get a clear view of SPX and levels that are in play for today. And this is a 1 day 1 minute chart, and according to this, the primary levels, there are no No primary levels in play. Call wall above, and again price trading well above the volatility trigger. All right, so DNT Matter asks, how do I get that from an options chain? I'll take a look at that in just a minute. So let's go to Bookmap now. In a Bookmap, I have updated levels. These are all the correct levels I'm showing in my cloud notes here. So I have SPY levels, and there's the SPY 439 combo 1 level. So that's an important gamma level, and that did act as resistance. And then there's prices spent right a large amount of time around the SPY 438 level. Note the cluster of volume there shown in the session volume profile right there. And then price has tested the SPY 437 combo 4 level, and then also the SPX 4373 combo level. And note the SPY 437 level was near the top of the range yesterday, and today, at least in the RTH session, it is at the lower end of the range for today. So price is trading above it today, and was trading mostly below 437 yesterday. All right, so those are the levels in play for SPX. Again, no shifts in levels other than the slight shift and the volatility trigger for SPX. Let's take a look at NASDAQ now. And we'll talk about setups from this morning in a few minutes. All right, so here's NASDAQ. And again, I'm showing my cloud notes here. So here's the NDX 15,000 level, large gamma 3, and then also QQQ levels. There's the QQQ 365. And let me scrunch this down just a little bit. And then here is the QQQ 363 level. Yesterday that was near the top of the range, and today, just like the S&P 500, that level is the lower end of the range for the day. Let's just take a look at a QQQ chart. Let's take a look at the levels. Let me find that chart. So there's QQQ, and so far today the upper end of the range is the 366 level. And again, these levels, other than the primary levels, might not be correct. So here is the call wall. That should be resistance down at 360. So QQQ, the NASDAQ, is trading well above the QQQ call wall. And for the NASDAQ, there were no shifts in levels. NDX and QQQ, the volatility trigger, put wall, call wall, and absolute gamma strike all remain the same from yesterday. All right, let's take a look at, let me answer DNT Matters question. So let's go to SPX. All right, so this may be difficult to see, but you should get the idea here. So this is SPX, an options chain. So what I will do at the end of the day, let me open up just so this you can see what I'm showing here. So today is the 14th of June, so that is that's already in play. I've already got the levels, and that was a very high IV, 53.97%, and at the end of the day yesterday, that was plus or minus 35 points. And then for tomorrow, that's shown right here, and this is Thinkorswim. It may be different in another platform, but I'm looking at right now it's plus or minus 46 points. So when this is closed, when the SPX closed after the RTH session, I will take a look at the closing value, take a look at this number right here, and it should be a little bit less. Volatility should come off, and I'll subtract that and add that to the number to get the lower and upper edge, the expected move for the day. All right, so I hope that answers your question. And while we're here, let's just see what's driving the market today. Here's the S&P 500, and it looks like a lot of large cap tech, Nvidia, Broadcom, AMD, Microsoft, Oracle, and it looks like a little bit of financials too. All right, so there you go. All right, let's take a look at a couple of other things. I've just got a couple of minutes before the announcement. I want to take a look at the Vanna model. Oops, wrong chart. Wrong chart again. Maybe I don't have it. Give me just a second. All right, here we go. So this is the Vanna model for SPX. I'll go over this quickly. What this chart is showing is market makers delta notional and how that changes with price. Delta notional shown on the vertical axis and price shown on the horizontal axis. There are two curves on this chart. This light gray curve is showing how market makers delta notional changes with changes in price, and this is showing that as price increases, market makers will need to sell futures to hedge their delta exposure. So that is typical of a positive gamma environment. And then on the next curve on this chart is the it adds implied volatility to the equation. So this is showing how market makers delta notional changes with changes in price and implied volatility, and that's the Vanna effect. Hence the name of the Vanna model. The Vanna is the change in delta with a change in implied volatility, and it is showing basically the same thing as the light gray curve, just they will have slightly less delta notional to hedge as predicted by the delta only model. Then on the other hand, as price decreases, market makers will need to sell futures to hedge their delta exposure, and that's typical of the negative gamma environment. Let's take a quick look and see where SPX is trading right now. And I've got SPX at 43.73. Let's see where that is on the chart. So that's right around the bottom. So this is showing as the price increases from here, market makers will need to sell futures, and if price decreases from here, market makers will need to sell futures. And then finally, let's take a look at some data. All right, so what I'm going to look at here is the gamma notional. This is market maker's position on the gamma curve for SPX, SPY, NDX, and QQQ. Give me just a moment. I'm going to open up CNBC on the on another screen so I can see what they say about the announcement. All right, so gamma notional is positive for SPX, SPY, NDX, and QQQ, and the only number that has changed this week, which is kind of strange, is gamma notional for SPX. All these numbers remain the same from Monday, and this number did increase from yesterday. So a little over 1 billion, positive 1 billion for gamma notional for SPX. So SPX and SPY and the NASDAQ are all pretty firmly in the positive gamma environment, indicating again that market makers will need to trade against price to hedge their delta exposure. All right, let's take a quick review of some setups this morning. And what I'm looking at here, this is the Spotgamma hero signal for the S&P 500. This is a combined signal, SPX, SPY, and XSP and ES futures. And what this is showing is options trades for all those index products, and combined, they're all versions of the S&P 500, combined into one signal, showing price with the white line, and the hero signal, options trades and market maker hedging activity, again for the combined signal. So let's take a look at puts and calls here. So what this is showing, I've separated out puts and calls. This rising orange line is showing that traders are buying calls, and this is what is driving price today. Note the notional value here is positive 1.1 billion. Traders buying calls, market makers sell the calls. They have to buy futures to hedge their delta exposure. And this number, put, the blue line, is also positive, indicating they're selling puts. And Spotgamma has talked about this recently, that what seems to be happening is traders or fear missing on the upside, so they're buying calls. And that's definitely been driving price higher. And that led to a nice setup this morning. Let's zoom in on this on the morning. So multiple pullback entries for a long setup. So this is at the cash open over on the left side of the screen. Note the rising orange line with multiple pullback entries. So let's go take a look at Bookmap. We'll take a look at ES for Bookmap. I'm going to zoom in. So there's the morning session. This is very similar to yesterday. The setup yesterday that I posted in Discord and on Twitter. So a pretty easy read this morning. Remember, traders are buying calls, market makers are selling the calls, they have to buy futures to hedge their delta exposure. So there's the first entry. Note the shift and the aggressive buyers coming in there. It's very clear, as Bruce would say, that's an easy read. The shift in order flow, aggressive buyers coming in. And note also the larger traders were buying with iceberg orders. 505 contracts in 4 transactions. And iceberg orders, large traders buy that first dip. That's 952 contracts in 8 transactions. And note the shift in order flow again. Pink dots on the way down, green dots up. Another pullback. Another pullback. And it looks like the final price target for the morning was the SPY 439 combo 1 level. And note the rising yellow line here indicating that buy stop orders were helping to fuel the move higher. And that's also shown by these small green dots here. Buy stop orders fueling the move higher. Right, I've got less than a minute to the announcement, so let's just switch to the live market here. And it was a similar setup for the NASDAQ, and also call buyers were in buying calls in Google, Meta, Microsoft, NVIDIA, all the usual suspects, the large cap tech stocks that have been driving the market higher for quite some time. All right, I'm going to go take a quick look at Hero. One thing to keep in mind is when I'm trading, I have multiple screens, so I don't have to jump back and forth. All right, so there's the announcement. So it looks like it remains unchanged, as expected. All right, let's zoom in on this a bit. So the first move is lower. Let's see, let's take a look at options traders. I'm going to switch to a shorter time frame. I'm going to go to a 30-minute rolling window period, shorter look back period. And what this is showing is that Hero's sloping down slightly, coming into the announcement. Traders were taking negative delta positions or closing longs. So they were selling their calls and buying puts as the time for the announcement approached. Let's go back to the total signal. And again, remember, we're on a 30-minute look back period. So algos are parsing the statement now. And initially, larger traders were buying the move lower with iceberg orders. That's shown by this rising light blue line. On the other hand, aggressive traders are selling, shown by the falling cumulative volume delta, the pink line. So now price ES is approaching the upper weekly expected move and also the SPY 435 call wall. And this also the SPX 4350 level that actually acted as support yesterday. And that was noted as support in the Spotgamma AM Founders Note. So CNB says Fed pauses, but median forecast rises to 5.6%. So I'm not sure, that must have been in the statement. So they're apparently, just based on what I saw on CNBC, FOMC is forecasting more increases in the future. Let's see what options traders are doing. So they continue to take negative delta positions, shown by the falling purple line. So now the question is, will ES find support at the support level from yesterday, the SPX 4350 and the SPY 435 call wall, or will it continue lower? So if it continues lower, the next level in play is the SPY 434 combo 3 level and also the lower daily expected move. And let's see what the NASDAQ is doing. Also moving sharply lower. NASDAQ is down since the announcement. It looks like over 100 points, and continues lower down, just back down to the upper weekly expected move and the NQ 15,000 level. and also the 360 QQQ call wall. So when price trades above a call wall, Spotgamma considers that to be overbought. So the SPY, QQQ, and NDX have been in an overbought condition for quite a while. All right, let's go back to ES now. So now trading below the SPY call wall, 435, heading down to the lower daily expected move. Large traders continue to buy on the way down. With iceberg orders they use to hide their size. 900 there in 9 transactions. 1321 there. And note the sell stop orders helping to fuel the move lower, shown by the red dots there. Let's see what options traders are doing. So now they've started to take positive delta positions as price moved lower, down toward the lower daily expected move. That's shown by the rising purple line. Note the slight lead effect in options trades. And about 30 seconds later, price starts to move higher. And that was just above the lower daily expected move. Let's take a look at VIX and see what VIX is doing. So initially VIX moved higher. This is a one minute chart just for VIX. And now it's reversing lower, and it is lower for the day. And that should support price move higher. And now large traders are selling strength. We can see that with this falling light blue line. Large traders coming in with iceberg orders. And so now the question is, will the upper weekly expected move and the SPY call wall and SPX 4350, the cluster of levels there, will that hold as resistance, or will price continue higher? And so far, so it's kind of a battle of iceberg orders here. Let's see what options traders are doing, see if they give us any clue. So far, options trading has leveled off right now. Let's see if we get any clues from NASDAQ. So far NASDAQ does not show any signs of moving higher. Still moving lower. Let's see what options traders are doing again. Let's go take a look at NASDAQ. This is a combined signal for NDX and QQQ, and they're taking positive delta positions, and that could potentially lead to a move higher in NASDAQ. Again, we're on a 30-minute rolling window period. Let's just take a look at some of the large cap tech stocks. Amazon was shifting higher, now maybe moving lower. Google moving higher. Meta, Hero also turning up. And Hero has leveled off for NVIDIA. And Floyd's Garage says, "Hi Doug, hi. How are you? Glad you're here. Fed speech and OPEX Friday. Yeah, I don't know about the Fed speakers, but yeah, Friday is the big June options expiration." All right, so there's Tesla moving lower. Let's take a look at NASDAQ. Hero still moving higher. Take a look at the S&P 500. Hero also starting to move higher. So options traders are buying calls, and they're actually buying puts, net buying puts for the day. Let's go back to the total signal, and that is rising. Negative for this 30-minute rolling window period, but the Hero line is rising. Does anybody have any questions or anything that you want me to take a look at? I can look at stocks, or we can continue to watch the S&P 500. All right, thank you, DNT Manor. Says, great walking through this with you. All right, Ford's Garage votes for ES as well. So we'll stick with ES. Again, when I'm trading, I'm watching multiple screens at the same time. So I have Hero on one screen and Bookmap on another. So I can watch order flow and hedging flow at the same time. And then the levels are key for me, knowing exactly where these levels are. And how price is reacting at these levels. Let's go take a look at Hero again. And now it has turned lower for ES. Hero turning lower, and after this pullback move higher, ES continues lower. So far the SPY 435 call wall and the upper weekly expected move have acted as resistance, and price is still heading down toward the lower daily expected move. Let's see what SPX is doing. All right, Trader Carlson asked, do you trade intuitively or statistically quantitative based, as in you know exactly what you're looking for and where looking for it? So I am a discretionary trader, not necessarily statistically quantitative based. So it's hard for me to call the market and make trading decisions at the same time, especially when the market's moving higher. So I'm looking generally to follow the larger traders, whether that be market makers or other larger traders that leave their footprints here, and I'm expecting reactions at certain levels. So the setup that I showed this morning was, again, I thought a pretty easy read. Let's zoom. We'll go back to that. So I'm reading order flow and hedging flow at the same time, and I have a plan for the day, again based on my positional analysis. And I was really looking for a trading range today. I knew that gamma market maker's position on the gamma curve was positive, and this was again a pretty easy read. The shift, large all these large green dots, aggressive buyers coming in, and also the large traders buying with iceberg orders as price moved above the 437 level, also VWAP, and traders were buying calls. That was the key, seeing that traders were buying calls. So following the market makers move higher, knowing that as traders buy calls, market makers sell the calls, and they have to sell ES futures to hedge their delta exposure. Let's see what, and you're welcome. All right, let's see what options traders are doing. And so now they have turned positive again. And Floyd's Garage asks, what was the lower expected move again? Are you talking about for E? All right, so for SPX, let's take a look at that first. SPX, it is at 4,333.83. So that's SPX. That's what I calculated yesterday. And let's go take a look at Bookmap now. And that is at 43.80. So that is for ES. And note there is a pretty significant point difference between ES and SPX. Let's see what it is right now. And I was using 47 points this morning. Right now it looks like it has dropped down just a little bit to 46 points. Somewhere between 46 and 47. Now back up to around 47. So it changes a little bit, but I have it at 46, 47. So that's the difference between ES and SPX, 47 points. So Trader Carl says, so you follow large traders' footsteps and essentially try to align yourself with them from traces in the form of certain criteria they've left that have historically led to certain price movements. So yes, again, I saw that traders were buying calls, market makers selling calls, and they have to buy futures to hedge their delta exposure. So it's as simple as that. Take a look at the post in Discord. I posted yesterday evening a very similar setup today. Very easy read. Just that's the value of this hero signal. So at that point, I'm watching, once I know that traders are buying calls, market makers are selling calls, they're buying futures, I'm just looking at order flow to confirm entries. So looking at shifts in order flow that I talked about this morning, those multiple pullback entries, preferably to a key level, was what I was looking for long entries. All right, now I've got to say this move lower is definitely providing some relief to my long-term positions. My short calls were taking quite a beating, so this helps me pretty substantially. One interesting thing to note here, let me turn up the heat map, and this is pretty typical. See all these resting orders in the heat map. I'm looking at this right here, this line. Note how all traders pull this liquidity a few minutes before the announcement. There's almost you can almost draw a line here where they pull their liquidity, and then the final pull right there. All right, let's see what options traders are doing now. So now they're starting to take positive delta positions. All Alright, so Trader Carlson asked, once traders are buying calls and once market makers are selling futures, what did that indicate to you and what is the logic behind it? Alright, so first of all, when traders buy calls, options market makers are selling calls. They want to remain delta neutral, so they have to buy futures to hedge their delta exposure. That's the most efficient way for them to hedge their delta exposure. So again, they want to remain neutral, delta neutral. When they sell calls, they have to buy futures. So they're taking the opposite side of the trade from traders. So again, they buy calls, and as price continues higher, or they sell calls, they have to continue to buy futures. And that's a very powerful force that can drive a stock or, in this case, the S&P 500 can drive that much higher. Now, there's also many other factors in play, especially for the S&P 500. Larger traders with iceberg orders, with stop orders. It's a little bit simpler with stocks. So let's take a look at a stock, for example. So I'm going to take a look at, so I'm back to a one-day rolling window period. Let's take a look at Google just as an example. So here's the, again, it's a lot simpler for stocks to understand. So note the, for Google, this rising orange line indicating that traders are taking their buying calls. That's positive delta with a rising line. Market makers are selling the calls, and they have to buy stock to hedge their delta exposure. I mean, it's just very, very simple and straightforward. And Hero shows this very clearly. And note as this line levels off, traders stop buying calls, price eventually moves lower. So again, traders buying calls shown by the rising orange line, positive delta, and market makers are selling the calls. They have to buy stock to hedge their delta exposure. So a lot simpler to look at and visualize in a single stock. Let's take one last look at the S&P 500. Let's go to the total signal, back to the 30-minute look back period. And Hero now is turning higher. So again, this may not lead to this exactly the same response that we may see in a single stock. There are many other factors, but it's a good clue. And especially in the S&P 500, maybe also the NASDAQ can lead to a good leading indicator of a long or a reversal setup, I should say. So in this case, potentially long, as traders start taking positive delta positions again. Let's go take a look at Bookmap. So I would, we know that now traders are taking positive delta positions, and it looks like the press conference has begun now. So I'm going to sign off in just a moment. Looks like this 434 level may be support. I don't see anything definitive in order flow yet. Let's take one last look at NASDAQ. So it looks like NASDAQ may have found support in the 15,000 level. All right, so I'm going to wrap it up. That's all I have for today. Enjoy the rest of your afternoon. And again, remember, tomorrow, tomorrow we have retail sales, and then Friday is options expiration. So I will see you tomorrow afternoon. Thanks again. Thanks for watching. Thanks for your questions and comments. And I will see you tomorrow. And Trader Carlson, D&T Matter, thank you very much for your questions and commentary. It really helps. So, and Floyd's Garage as well, and YouTube. All right, thank you everyone, and I will see you tomorrow.